Okay guys, we're going to be looking at, in this chapter, which is the first chapter in our second series, Principles 2, it's looking at, and for those of you that have never been together, welcome to Accounting 2, Principles 2. It's actually chapter 11 in the book, and this chapter looks at liabilities and payroll, but specifically it looks at current liabilities. So we're looking at the accounting treatment for current liabilities and payroll. Now, liabilities and payroll, let's just do a little review. We know from the accounting equation, what do we know? That assets equals liabilities plus owner's equity. That's what we know from the accounting equation. We know that as a company business runs for a certain period of time, a month, quarter, semi-annual, year, the results of that operations are a profit and loss statement, and the P&L, the revenue minus the expenses, equals the net income. And this P&L activity over here, let's change colors just to be fancy-dancy. This P&L activity over here influences the balance sheet through owner's equity, by owner's equity going up or owner's equity going down. So assets equals liabilities plus owner's equity. Chapter 11 is looking at liabilities, specifically current liabilities and payroll. And the reason payroll is lumped in with this chapter is because payroll is a current liability. So let's start by just asking a question: what are liabilities? What are these things, these liabilities? Right? Assets are resources that a company owns or claims against, they're resources that a company owns or has control over. That's what assets are. Liabilities are claims against those resources. Owner's equity are not claims, but they're the assets that we actually own. So, for instance, if we bought a house for $150,000, let's use an example that people can relate to. Maybe say you put down 10%. So you put down how much? $15,000. How much did you borrow from the bank? $135,000. How does this show up as assets equals liabilities plus owner's equity? Well, what are the resources that you own or have control over? $150,000. This is a good example because you don't own the house. Really? No, you have control over the house. You live in the house. But from an asset perspective, it's $150,000. Now, what are the liabilities in the owner's equity? What are the claims against that house? Well, the bank has a first claim of $135,000. If anything happens, they are the first claim, and you, as the person that put up $15,000 for owner's equity, have an ownership claim in the house of only 10%, only $15,000. So over time, we will be paying down this note, this mortgage, 15 years, 20 years, 30 years, and owner's equity will be going up, so that at the end of the time of the house, let's say it's a 20-year mortgage, what would our balance, let's assume the house does not go up or down in value. What would happen after 20 years? You would have a balance sheet that looks like this: $150,000 equals 0 plus $150,000. That's what your balance sheet would look like after 20 years. Liabilities are 0 because you've paid them down. So liabilities are claims. Okay? So what we want to do, and that's just generally speaking, Chapter 11 looks at two types of claims, these liabilities right here. Right? There are current and there are long-term. How do we make the distinction? Current liabilities, and where do these liabilities come from? Let's speak a little more about, before we break it into current and long-term liabilities, let me just draw a little picture here. Think of liability. It is a present obligation. Let's make this one. A present obligation for a future payment or service. Let's write over here, for a future payment or service. Let me go a little timeline down here. Here's today. Time period 0. Let's just call this time period 1. And let's call this -1. So it is 1, a present obligation. 4. I'm going to get fancy. I have to do it. I just have to. Present obligation for a future payment or service because of, and let's make this 3, and write down here, because of what? A past transaction, TRX, or event. That's what a liability is. 1, 2, 3. Here's the 3. It is 1, a present obligation, right? Present claim. We talked about liabilities being claims. A present claim or obligation for future payment or service because of a past transaction or event. That's what a liability is. Now, how do we distinguish between current liabilities and long-term liabilities? Let's do that in the next video just to keep this one short. Make the distinction there and talk about specific kinds of current and long-term liabilities. See you in the next video.